Welcome back. Some huge changes are happening right now in our US housing market. So for example, last week, inventory increased by 35% on a year-over-year basis. That's the biggest annual increase since April of 2023. We're also seeing asking prices come down from last year, and also the share of price reductions also increasing as well. Some very big changes based on my own analysis of Realtor.com's data. They actually just posted this on Thursday, May 9th. And just like my previous videos, I did not even read it. Instead, go to realtor.com/research/data. And by the way, I'll provide a link in the video description below for this information. So if you guys do read this analysis from Realtor.com, let me know if my take is close to theirs. Anyways, when you go to this website, click on this link right here. It takes you to more or less this information regarding asking prices on a national level, active listings or housing inventory, the number of new listings, days in market, and of course, the increase in the number of price reductions as well. And by the way, if you guys get any value out of today's video, please hit the like button. We appreciate that. Also, consider subscribing as well. I post frequent housing market updates so you guys can be more informed. So this report was for the week ended May 4th. All these numbers are the changes compared to the previous 12-week period or 12-month period. Asking prices. So last week, we saw a decrease of 0.2% overall on a national level, down by 0.2%. That marks the third consecutive week in which asking prices are down on a year-over-year basis. And this is very much a lead indication of closed home sales in the coming months. So think of it this way. If we saw asking prices absolutely skyrocketed and we saw the share of price reductions also decreasing, that'd be a recipe for home prices to increase big time. But in fact, we're seeing just the opposite, asking prices down for the third consecutive week. On top of that, the national median list price has been negative or flat year over year for the past 10 consecutive weeks. 3 weeks ago, for example, was the biggest year-over-year decrease on record for data that goes back to July 2017. So weekly data from Realtor.com goes back to July 2017. So that was for the week ended April 20th, a decrease of 1.1% year over year, the biggest decrease on record according to Realtor.com. It's possible more buyers are waiting on the sidelines, waiting for home prices and or for mortgage rates to decrease. Also, we're seeing rising inventory, which is likely stalling out this growth of home prices on a national level. Again, every real estate market's different, but on a national level, asking prices are down for 3 consecutive weeks. All right, I have a lot to share regarding inventory numbers, some really big changes here. Last week, we had 35.1% more houses for sale. These are existing houses compared to the same time frame in 2023. And that, by the way, is the biggest year-over-year increase since April of 2023. So there's been more houses for sale compared to the previous year for the past 26 consecutive weeks, going back to mid-November last year. So more or less what we're seeing right now is that we have basically a half of a year of gains of inventory from the previous year. This is, of course, is giving more options for home buyers, which of course is limiting home price growth. Now, speaking of that, inventory has been on the rise from both an increase in the number of newly listed houses, but also due to decreasing demand. So looking at the latest data we have from Redfin, when looking at pending home sales, we're at least a 3-year low during the same time frame. We're also down compared to 1 year ago as well. So anyways, we're seeing a decrease of contracts being signed between buyers and sellers or pending home sales, but also new listings increasing as well. Now, speaking of inventory, I want to share another source with you guys, and this is of course from altosresearch.com. So they actually reported that inventory increased by 33% on a year-over-year basis for the week ended May 3rd this year. So right now, there's approximately 139,000 more existing houses for sale right now compared to 2023. There's also about 61,000 more houses for sale for the week ended May 3rd compared to the start of this year. That represents a 12% growth rate year to date. Compare that to the same time frame last year, inventory was decreasing, down by 11%. So this year, inventory increasing by 12%, whereas last year it fell by 11% during the same time frame. So in other words, supply was falling from January through April last year, but again, this year increasing. So if you guys are a home buyer, it's a positive sign to see that we have approximately 30% more house for sale on national level, which of course gives you more options, but we're still down by about 38% compared to the same week of 2019. Now, here's something I want to revisit with you guys because this is something I actually put together based on my own analysis of Realtor.com's data regarding inventory levels on a national level. I shared this in my video from about a week and a half ago, but I just want to kind of like touch on this very briefly, can't talk, because the growth rate of inventory that we're seeing this year so far, this is January through April, is more than double the average rate looking at pre-COVID levels. So the growth rate so far this year, January to April, is a 10% increase so far this year. Last year, this time, we were down 9%. In 2022, only an increase of 1%. Inventory, of course, skyrocketed in 2022, but it didn't start skyrocketing until May. So we're well above the pace we're seeing in 2022, which is pretty wild. We'll have to see that trend continues, given the fact that new listings did increase last week, but they increased at a much slower pace, which I'll share with you guys here in a little bit. But look at this though, year to date so far this year, up by 10%. In 2021, it decreased by 18%. So go figure why home prices increased so much in 2021. Inventory was basically being depleted. 2020, it fell by 1%. Now here's where it gets really interesting. So this year up by 10%, 2019 up by 2%, 2018 an increase of 6%, 2017 4%. So the average increase from January to April, looking at 2017 through 2019, is a 4% gain, whereas this year it has increased so far by 10%. So inventory, or the rate of inventory growth, is more than double the rate compared to the average pre-COVID levels. To me, this is really important to be aware of, and please share this video with anyone you may feel may benefit from it, because I think a lot of people, and I'm guilty myself, talking about inventory levels compared to a year ago and compared to pre-COVID levels. But I don't, as far as I know, there's not a whole lot of people that I'm aware of that are talking about this growth rate of inventory that we're seeing this year compared to pre-pandemic levels. I mean, I just looked at raw data from Realtor.com, which is this column right here, and just basically put this all together myself. Anyways, I hope you guys got some value of that, but we'll have to see if this continues, because if this continues to increase at a much faster pace compared to pre-pandemic levels, that's going to be a bumpy ride to see, at least regarding our housing market in the last half of this year. Let's just say that. So anyways, let's go back to this analysis that I have regarding new listings. And actually, really quickly, let's have a look at inventory according to altosresearch.com. So again, right now, there's around 560,000 houses for sale. 1 year ago, around 420. So right now at 560,000, this is at least a 3-year high, because this is way higher compared to 2022 and 2021. But at 560,000, this is still lower than 2020 at 725,000 and lower than the same time frame in 2019, down by about 38%, because back then there was around 907,000 houses for sale. Now there's less than 600,000. Okay, let's get back to my own analysis of their data here. So looking at the number of new listings, that only increased by 3.6% on a year-over-year basis, which is different from what? April 6th, a giant increase of 30%. Then we saw double-digit increases from mid-February through the end of March. This decrease down by 7.8% was really due to the fact we have the Easter holiday around that time frame. In any case, I just found this interesting that over the previous 2 weeks now, the number of new listings is still increasing year over year, but losing momentum. So excluding the Easter holiday week, which was about a month ago, new listings have been higher compared to the same time frame in 2023 for the past 28 weeks in a row. The main contributor to this is rising inventory. This is one of the main reasons why inventory has been growing. However, the gains, like I mentioned, are losing momentum over the past 3 weeks. In my opinion, this could be to an increase in rates or mortgage rates, and or since new listings were falling over 20% 1 year ago. So looking at May of 2023, which is more or less right here, inventory was down by 16% and down 25% in mid-May. But new listings decreased by double digits from April 22nd all the way until we hit August 5th, 2022. So because new listings were falling at a very big clip during that time frame, this could be one of the reasons why we're up on a year-over-year basis. Okay, let's change gears slightly here and talk about how fast or how slow houses are selling right now. So last week, it actually took 1 day faster to sell a house on average from 1 year ago. Frankly, though, there hasn't been a whole lot of changes over the past 1 month. The days or the changes of days in the market has been relatively flat for over 1 month. Okay, changing gears slightly here to talk about the changes in the number of price reductions, because last week that increased by 48.9%, approximately 49% more price reductions right now compared to 12 months ago. Also, the number of price drops has been increasing for the past 15 consecutive weeks, at least compared to the previous year. This is likely from a significant rise in the number of houses for sale or house inventory. In addition, when looking at the share of price reductions according to Altos Research, the share of price drops right now is at least a 5-year high as well. So this is the share. So the share right now at more or less 34%. This means that approximately 1/3 out of all the houses for sale have reduced their asking prices. That's the share of price drops at around 33% right now. This is higher compared to last year at 29%, way higher compared to 2022 at 20%, 21 at about 16%, also at 33% right now, higher compared to 2020 at 24%, and also compared to pre-COVID levels in 2019 at this time, it was at around 31%. So the share of price reductions is at least a 5-year high during the same time frame. All right, if you guys are still watching today's video, I appreciate you guys so much because this video tends to take me quite a few hours to do or to make, but I enjoy making this video because it's just sharing my own thoughts regarding our housing market. So speaking of that, let's talk about some overall trends we're seeing over the past week and also a summary of today's video as well. So for a summary, number one, the national median asking price has gone down from the previous year for the past 3 straight weeks. This is likely due to an increase of housing inventory up by 35%, more price drops, and elevated mortgage rates. Number two, housing inventory increased by 35% last week compared to 1 year ago. That's the biggest annual increase since April of 2023. This is likely from lackluster home buying demand and new listings increasing every single week since last November on a year-over-year basis. However, even though the number of new listings has been on the rise, there's still approximately 38 to 39% fewer houses for sale right now compared to 2019's levels. And number three, average 30-year fixed rate mortgage rates have decreased by about 80 basis points since last October, when the average rate or average daily rate was around 8%. But because 89% of people with a mortgage have an interest rate below 6%, that's based on data from Redfin, that has been limiting the amount of people listing their houses for sale, and thus keeping inventory levels well below pre-COVID levels. Again, a friendly reminder, we do not need to see inventory rise above 2019, 18, or 17's levels, nor see home prices decrease. And a perfect example of that is what happened in 2022. Let's watch the rate of increase of inventory in the coming months. And this chart right here, or this analysis, I'll definitely make a video every single month regarding this because, and again, if this increases at the same pace this year, we should see inventory basically being much higher towards the end this year compared to previous years. I'll definitely keep you posted regarding that, and I'll make the update regarding that probably in the first week every single month. That's when Realtor.com announces the latest data from the previous month. So in any case, getting back here, so number 4, the share price drops is at least a 5-year high during the same time frame, but still well below the peak of 2022. But the share price drops tends to peak in the winter months and not in the spring home buying season. Number 5, houses sold 1 day faster compared to last year. Again, that's a lagging indicator of our housing market. So what are some potential huge changes ahead? But again, I am not a real estate market fortune teller. I don't speculate a whole lot on this channel. So hope you guys appreciate that, because in my opinion, if you speculate and you're wrong, then you just lose credibility. So there's a lot of factors that impact our housing market and that are completely beyond our control. And that's one reason is why I don't really provide my own predictions. I sprinkle in my own opinion, but overall, I don't post videos regarding the housing market's going to crash. We're going to get to all-time record highs of home prices, etc. Because there's so many things that impact our housing market, making it virtually impossible to predict. So therefore, I share other people's predictions. Anyways, number 1, average 30-year fixed rates are more or less at a 1-month low as of Friday. But according to Redfin, housing affordability as of Thursday is at an all-time record low. And that data goes back to 2015. And by the way, here is the daily rate. According to the Mortgage News Daily, as of Friday, a 30-year fix for people with great credit, 7.16%, jumbo 7.4%, and FHA and VA loans is around 6.2 to 6.4%. And looking at rates 1 year ago, we were at 6.57%. So rates have increased by about 59 basis points compared to the same time frame of 2023. However, the average 30-year fix at 7.16% is more or less in line with the lowest rates we've had going back to early April this year. All right, number 2, housing affordability is still a huge hurdle for home buyers. We've seen the huge spike in rates and home prices over the past several years. Early signs of home buying demand have been absolutely all over the place this year, due to the volatile housing market, to say the least. Anyways, looking at the week ended May 3rd, based on data from the MBA, they look at the amount of people who are submitting loan applications to buy houses for mortgages. That decreased by 17% on a year-over-year basis. 1 week ago, it was down by 14%. So the year-over-year decreases is actually getting a little bit worse compared to the previous year or previous week. Also, the National Association of Realtors, or NAR, reported that pending home sales this March were flat compared to March of 2023 and remains very close to all-time record lows. In stark contrast, new home construction sales, a measure of a signed contract between a buyer and a home builder, increased by 8% during the same time frame. So sales of brand new houses up by 8%, whereas sales of existing houses, based on all contracts being signed, is flat from 1 year ago. It appears our housing market is highly rate dependent, so the data coming in is of course ever changing, and real estate is local. Number 4, the direction of our US housing market, in my personal opinion, will depend on the rate of increases of inventory levels and the balance between supply and demand, and of course rates as well. Number 5, by far the most important one. I appreciate you guys watching today's video. If you guys got any value out of today's video, then please hit the like button. I greatly appreciate that. If you guys want a real estate agent referral, check out my website. Which is realestateteamfinder.com. Or if you're looking to buy or sell a house in the greater Sacramento area, we would love to help you. Please email me at jason@meetjasonwalter.com. Hope you guys have an awesome day. I look forward to seeing you on the next video.